So did tip income just become tax-free under the One Big Beautiful Bill? Well, sort of. The new law created a deduction for qualified tips, not a blanket exclusion for all tips that are earned. The deduction is also capped, and it also phases out at higher incomes, and your paycheck won't change in 2025. I'll show you who qualifies, how much you could actually save, and the traps to avoid. My name is Merrill Taylor. I'm a CPA. We help high-income earners and business owners cut taxes proactively. This video is for educational purposes and not individual advice, so make sure, as always, to talk with your CPA or tax professional before taking any action. All right, so let's jump into it. So the One Big Beautiful Bill lets eligible workers deduct up to $25,000 of qualified tips from federal taxable income for tax years 2025 through 2028. So it's a temporary provision for just a few years. You can claim it even if you take the standard deduction. So you don't have to itemize. This is what's called an above the line deduction. Basically means you don't have to itemize to get the deduction. There are income phase outs that come with it. So generally it's starting around $150,000 of income for a single filer and $300,000 for a joint filer, with no benefit above roughly $400,000 for a single filer and $550,000 for a joint filer. For the self-employed, the tips deduction can't exceed your net income from that trade or business. So if you're self-employed, let's say you make $10,000 and then earn, say, $1,000 in tips, so now you made $11,000, but you have $12,000 of expenses as a self-employed, so you actually have a loss from that business of $1,000 during the year, then your tips would not be deductible in that case because you don't have a net income to deduct those against. So that's basically how that works. So now not every service job qualifies for this benefit. The law tells Treasury and the IRS to publish by October 2nd, 2025, a list of occupations that customarily and regularly receive tips before December 31st, 2024. So they're looking back at December 31st, 2024. They're looking at what occupations customarily and regularly receive tips. And until that list is out in early October, and maybe about early October, the IRS and Treasury generally aren't great with deadlines. Of course, they hold you to the tax deadlines, but they're not great on deadlines themselves. So I wouldn't hold my breath on the October 2nd. Maybe they get it out by then. Who knows? I wouldn't count on it, but maybe they surprise us. But anyway, so until that list comes out, then eligibility for some roles like app-based delivery, salons, clubs, golf caddies, it's uncertain whether they would actually qualify for this benefit or not. So watch for that list to come out if you're in a gray area job. Also, you can subscribe to our channel here. We'll make sure to bring updates as we learn more from the IRS and Treasury on that. Now, the other thing that applies, that this only applies to voluntary customer tips. Service charges, like, if you work in a restaurant or another place, and let's say an automatic 18% is added for large parties, those are considered wages and are not considered to be tips under IRS rules and do not get this deduction. That's not available for that benefit. So it's the same if your employer dictates or fixes the amount of tips that you get. So we have to keep that line kind of clear that this has to be a voluntary tip and not a mandatory service charge or something that's added to a bill. This new break reduces federal income tax. It doesn't change Social Security and Medicare taxes, so you're still going to pay full Social Security and Medicare taxes on the tips. You'll just not pay income taxes if they qualify for that. And then employers will still owe payroll taxes on those as well. The employer share of that will still be due. You can claim the deduction if you have reported tips on a W-2, a 1099, or a Form 4137 for tips that you reported directly. If you must include Social Security numbers on the return, and married filing separately generally doesn't qualify. So if you're married and you file a separate return, then you're going to miss this deduction completely. So you might want to think about filing jointly if this deduction is significant for you. Once all those are in place, then you apply the income phase outs that we covered earlier. And if you're below those income phase outs, then you might actually qualify for this benefit. So let's take an example. So example A here, we have $12,000 of qualified tips in the 22% bracket, saves about $2,640 of federal income tax. Take another example, example B, say 25,000 of qualified tips, you hit the cap, you're in the 24% bracket, saves about $6,000 in taxes. So most workers will see hundreds to low thousands in savings depending on the bracket and the tip amount that is received. And remember, payroll taxes still apply, so this is an income tax reduction only. For 2025, the IRS is actually not changing the withholding tables or W-2 reporting quite yet. You'll see the benefit when you file your 2025 return in early 2026, and then withholding updates are expected starting with 2026 after new forms and guidance roll out. You do realize why the IRS is doing that and what's going on there, right? Is what happens is when people go and file their return, if they get a bigger refund, they feel like they saved more in taxes. So if they adjusted your withholding, then your refund would adjust and you would look at it and say, hey, I thought I was going to get a bigger refund. This law didn't really help me at all. And so they're kind of doing something a little sneaky. They're not changing the withholding tables for a reason, and that because when you go and file your return, you're going to get a bigger refund and it's going to feel like you saved a bunch of money in tax, which you will, but it's kind of a psychological thing that they're trying to pull there. So just be aware of that. Now, getting back into the tips and how to save things. So some tips for the tips is to keep a daily tip record. So you want to save your pay stubs and report tips to your employer as usual. If you ever underreported during the year, then you'll use 4137 at tax time. Clean records make this deduction easy to substantiate. If you're self-employed, say an independent stylist, the tips documentation or tips deduction can't exceed your net income from that activity like we covered. So, and then for employers, the law also touches the FICA tip credit. So watch for payroll system updates and guidance as year end approaches. You can claim both the tips deduction and the overtime deduction in the same year if you qualify, but you can't double count the same dollar as both tips and overtime. Those have to be two different things. All right, so some quick frequently asked questions that come up in this, some things that we've covered. Just a quick summary. So one, do you have to itemize? No, it's an above the line deduction, not subject to being itemized or not. Number two, are all the tips tax-free? The answer, only qualified tips up to $25,000 and only for income tax. FICA still applies, and FICA is the payroll taxes, FICA and Medicare. Do mandatory service fees count? No, those are considered wages and not tips. And then finally, will my paycheck go up now? Will you see a change in your paycheck? And the answer to that is not in 2025. You'll see it at filing time unless you proactively adjust withholding or do something on your end to adjust that. So who is actually on the eligible jobs list? Well, the Treasury and the IRS must publish this list by October 2nd, 2025. So stay tuned. What do you do next? We'll verify that your job will be on the list of IRS occupations, list and track your tips carefully, and model your 2025 taxes to decide whether to tweak your W-4 or not. And if this is helpful, then make sure that you hit the like and subscribe button and send this to someone who lives on tips. It might be helpful to them, and we'll be sending out updates as we receive those from the IRS.